Here, buddy.
You don't like pet, Kunal?
No.
No, you don't like dogs?
Indian people don't like dogs, man. You should know that.
I know. My parents don't like it either, but that's what I like them.
Is your mom just afraid for her life on that with the dog running around?
No. She likes him too because he's tiny. He's not gonna grow. This is the size he's gonna stay.
Oh yeah.
He never grows.
Boom. Wait a couple minutes. Hey guys, how y'all doing? Kunal here. Give us 2 minutes. Let everybody get walked in, and we're gonna get this thing started. We have a Q&A box. If you guys got any questions or need anything, make sure to just type in the question thing. Mr. McGuire, don't join the video. Dun. What's going on, Willie?
Not much.
Man, what a hot market, man. It's like every time the trading day ends, you're just ready to start it up again.
I know, everything's flying all over the place like it used to when I first started.
Yeah. That's like that's really the telltale sign of a good bull run. When you start to see those stocks making like the big, if you have like these stocks every day making like those big 100% type moves, 50% moves, even if there's just one, that usually means there's really a lot of spec money flying around. I mean, you think of DRL, USU, Camped. I mean, every day there's something just like flying. LITB.
AMAT.
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 AMAT. Yes, that thing was hot. That thing was pretty hot.
Yeah.
Someone else just joined us on video.
What's somebody doing there? Eject.
I don't know.
Stop joining the video calls, guys. Corwin, get off that thing. Mr. David Cole, how you doing? Long time no see. Hey, Mr. Ream, every time you give me a call, I'm always in a meeting, so I think sometimes I pick up so you know that I'm not blowing you off. But then it might just go for a little bit. Sherry, how you doing? Clayton, my man, good to see you. Sato, what's going on? Mr. Conley, how you doing?
Yeah, looks alright.
Matty Trump in the house. What's going on?
Yeah, I know what you're saying.
Boom. Give us 2 more minutes, guys. I just got to make sure everybody gets in here okay, and then we're going to get this party started. Willie, what happened to your original outfit you were wearing?
I got dressed up just for the webinar.
Oh, boy. Me too. I changed too.
I changed too.
I mean, I only have basically 2 gears. One is tank tops, and then the other one is just...
Yeah, I like to be comfy too, man. I don't like to wear like congested clothes.
I used to work in an office, and everybody would have to dress up, and then I would still wear flip-flops. Like I'd wear a suit, and then I'd wear flip-flops. By the first hour, once everybody was there, I'd start taking off every article of clothing I could, and I would be sitting there with like a button-up and flip-flops, and everybody would just be so sick with me. So then my boss would always say, well, what am I supposed to do with you? Everybody's complaining. I said, well, you know, when somebody else wants to be the rainmaker, take my title, then they can dress however they want. And he's like, that's not going to work. And I'm like, I know, I'll go put my shoes back on. And that would happen every day. Man, why is everybody joining this video?
Oh.
Hold on. Karunakar, get off that thing!
Karunakar!
All right, 2 more seconds, guys. I got just a few more folks piling in. Hey, Walter Sirius, Where have you been? I've been trying to get a hold of you on Facebook, and you've removed your Facebook. You remember Walter, Willie? He's the 16-year-old that wanted to be our intern.
Yeah.
He's cool as hell. But I've been trying to get a hold of him on Facebook, and he removed it. He must have got grounded. Vaso, my man, what's going on? All right. 30 more seconds, guys. I got the last group of people just walking in, and then we're going to get this thing going. Did you do your watch list for tomorrow, Harsh?
Yeah, it's right here. In my head.
Oh, what do you got? Give me a ticker.
I got OHRP for a bounce. I got 3D stocks, Triple D, SSYS, and X1 for bounce tomorrow. It's a nice pullback so far.
Yeah. I tried to play the bounce today.
Yeah, today wasn't the bounce. Tomorrow might be.
I know. I do that. You know what? Bounce plays are really tricky, I noticed, because when you get it, you're going to get the big gain, but you might have to try like 1 or 2 times. Sometimes you get 3 times and take like a small 10, 20 cent loss. Then when you nail it, you get the $2, $3 gain or whatever you want out of it. But I've always been like that. Those bounce trades, I take a stab at it a couple times. And same thing with rubber band shorts. I always have to take a couple stabs at it, and then I'll hit it. And you know what happens, though, when you have like a chat room and stuff like that, is that people get so frustrated when they lose like 20, 30 cents, then they're all gone by the end of the day or mentally checked out, and then they hit it, and it's the big ripper.
Yep.
You know, it's the big ripper, so what are you going to do? All right, guys, I think everybody's in here. Guys, welcome. We are keeping this thing going, so the Path to Profitability series, we're going to try to do this every week with a student of ours. We came up with this idea a couple months ago. You know, I always talk about Mary Beth, and because she's my business partner and I work with her all day, you know, I'm always talking about her. And then I sit there and I look through our ClickFund, and you know, we have 250 traders in ClickFund that we've given a capital to and tools with, and that we work with. And I'm looking through the results of ClickFund, you know, every day, and you start noticing it's like, man, there's so many other really, really good students besides Mary Beth, you know, that we need to talk to, because the best way to learn trading is from other traders. I very specifically believe you can't learn trading from books. Once the lights go on and everything is flashing and you have to go out there and compute dozens of variables at any given moment in real time, there's only a very few ways to do it, and that is by developing your trading skill in a very specific way. And that goes from your education to then practicing on a simulator, then to a very specific way that you have to start trading, and then how you continue on with that. And you know, as I'm going through the ClickFund results, you know, it's like I start just making notes, and I'm like, you know, this guy's really good, this guy's really good, this guy Chris is really good, so on and so forth. And I thought that Harsh would be a really, really good student to bring on here. He's a dear friend of mine. He's like my kid brother. I'm trying to get him to move down here for the summer so I can work with him. But Harsh came to me, I don't know, probably almost a year ago now. And he goes or was going to Temple University. He was studying pharmacy, and his last name is Patel, and my family, my whole family's Patels. And so I immediately thought, man, this guy's probably like my 3rd or 7th cousin, you know. And so I reached out to him, and Harsh, through his emails, man, he had like some really grandiose dreams. Grandiose dreams of like, man, I'm going to make all this money. I need to open an account. I'm going to make all this money, join the chat room, and I'm going to pay my tuition, and then I'm never going to become a pharmacist because I hate it. And I'm like, man, that's a great idea, except you don't know anything about trading, and you know, you have no education yet. You have nothing. He's like, no, I can do this. I can do this. And so he opened what we call a prop trading account. And before, you could open up prop trading accounts for like $10,000, $15,000. sometimes even $5,000, and they'd give you like $100,000 in buying power, and then they just let you go wild and flip it around. So Harsh had opened one of these accounts, and I at that time was trying to talk him into taking a boot camp because at his age, you know, how old are you, Harsh?
I'm 20. I'm gonna be 24 now. 24.
So he's, at that age. So when I meet him, he's 22. And usually with our youngsters, I always try to stress, you have your whole life to trade. If you're 22, 23, 25 years old, you could be trading for 50 years maybe if this is something that you like to do. So there's no hurry to just jump in and start trading. And Harsh, like a lot of smart people really get screwed up in trading in the beginning. I believe, because smart people are used to success all the time. They try something and they're successful. They want to learn something, they're successful. They get a job, they're successful. They go to school, they get good grades, they're successful. And so really, really smart people are the toughest people to train in trading because they are so used to success. And this is a whole different way of thinking. It's not a linear way of thinking like it is in medicine or engineering, where if you see this, then it must be this. Where you have linear answers and you can memorize them and learn them, and there's 100% certainty or a lot of certainty. In trading, it's not like that, and so smart people always get screwed up in the beginning. They have to learn some tough lessons, and so I try to talk Harsh out of it because he's super smart, he's young. And he's Indian, and Indian people are just terribly stubborn in general. They're like my biggest pains in the butt when I get the young Indian traders, because they all want to make a lot of money because their parents want them to get jobs. That's how I was. I was in college, and my dad was like, "You need to be an engineer," and I'm like, "No, I'm gonna be a millionaire trader," and that doesn't work. You want to prove everybody wrong. So Harsh put $10,000 into account, and he went like buck wild. I mean, I'm talking wild, because he had $100,000 in buying power, and I believe even his first couple days, for a little bit, like he was doing pretty good, and it was by luck. And so that got him this monster head, like, oh man, I can make $1,000 a day off my $10,000 account, and I'm gonna pay my tuition, and I'm just gonna be balling for the rest of my life. And what happens is when you win, and it's by luck your first few days, it typically builds really, really, really bad habits. Really, really bad habits, because you want more of that. And so then what's reasonable for your size account is to make a couple $100, $300, $400 a day, do it consistently and grow your account. That's a proper way of doing it. But once you've made 1,000, making 200 it doesn't excite you. And so Harsh went buck wild, and he blew his $10,000 account like in weeks, maybe a month tops. And then he was like, "Man, like, I guess I should take the boot camp, huh?" And I'm like, "Listen, man, it stinks, and it happens to us. I've blown so many trading accounts from the ages of 18 to 22. It stinks, but you're at a good age where you can come back from it if we can get you back into a proper mindset and system." And you need a system of learning, and you need a system of methodology of how you trade. And if you do that, then you can make the comeback. So he did that. He took the boot camp, and then from the boot camp, what was interesting was, because he's in college, he hits me up one day, and he's like, "Yo, man," I'm like, "Why haven't you been in the chat room?" And he's like, "I feel bad because I missed one of my boot camp payments and I owe you money." And I'm like, "Don't worry about it, man. Like, go to school, get your good grades, finish, man. We'll work that out later. Why don't we do this?" And, at this time, ClickFund just opened. I said, "Listen, I'm doing something where I'm backing traders and I'm giving them capital. Why don't you just give me a piece of the action on your profits till you're, all paid up in full, and we'll go from there. I know you can trade now." And he's like, "All right, let's do that." And he's been doing really well, getting better every day. And he's in our chat room calling out plays and helping a lot of our students, like Robert and some of our other students. And they love him. His methodology is so tight. And the plays he's calling in the chat room and the profits are just fantastic. He's really made a big growth. So, Harsh, can you tell us the story, man, how this all went down? Like, how did you open that first trading account? What was going through your mind? Tell us how the progression of from there to now.
Hey, everyone out there, can you hear me, everybody?
Yep.
Yep.
All right, all right, all right. My name is Harsh Patel. Everybody knows now by now, and I started my trading career when I was about to deciding whether I should go for pharmacy school or whether I should continue with my master's degree, which I just got in this May. So when I first time like 4 day, the first time I got in touch with Kanal, it was through the 4 day class, the Groupon. And I still remember it was last year, like 2013, and it was April or May. And my girlfriend, she's the one who bought me the 4 day class as a gift because she knew I was always interested in stock. I'm not the one who even bought the 4 day Groupon thing, like the Groupon course, the 4 day class. After I took that class, I thought like, okay, I got everything I needed. I'm done. I'm super set. I'm about to trade live. I'm about to make money. So whatever money I had, like my parents used to give me tuition when I was in school. Like every semester, they'll send me certain amount to pay my tuition. So what I did, I went very wild way, like without even thinking twice. I used my parents' tuition money to open an account. And in the beginning, the first week, I made like around 4 or 5 grand in just a week without even like just taking after a 4 day class. Like that 4 day class gave me fundamental, and it gave me the confidence that yeah, I could do this for a living. So I started doing it. And then in the beginning, the first week, I made some money. And then within a month, my account was gone, like everything, the penny to the penny, not even a penny for me. Yeah. So I can't even get the 2,500 back in order to take the boot camp because I was being told before I opened the account, don't do it, you're gonna lose it. And I was like being a smartass. I was like, you guys don't know, I could do it. And then I did it regardless. And then they were right at the end of the day. They were right and I was wrong. And it was so hard to admitting, like at first, that I was wrong, guys. Like I should have taken the boot camp instead of wasting my $10,000 account. Like I wasted that money. It was my tuition money, and then I was in a big mess because I had to pay my tuition, that which I don't have, like which I didn't have at that time, because I used that money to the account. So I was in a kind of mess for a while, and then I started doing a paper trading because I knew like I had a love and a passion for trading. The first time I learned from Kunal through the 4 day class, like I knew this is what I could do. Like I really could grow in this. And like this is what, like if I wake up every day 8 o'clock, I would not have any problem because I'm the guy. It's so hard for me to wake up even at noon. I can't. Like I wouldn't. I mean, I bunked every like 8 a.m. class when I was in college. I couldn't go. I just couldn't wake up. So it was so hard for me to wake up. The reason I wasn't interested, and I was going for the subject that I was not like. I had no interest in chemistry by the 3rd year. Like I took chemistry just because my parents, and it's a complicated story, guys. So I'm not gonna go deep, but in short, like I blew my account when I opened my first account without taking the boot camp, and which was not the right decision. So anybody out there who hasn't taken the boot camp and still wondering or still deciding, should I go for it? Should I not? It's 25 or 3 grand. I don't know. I can save that money, or I can open the account and I can make double, and then I'll do the boot camp. You won't have nothing to make it double. Like you're probably gonna lose your shirt. I'm not trying to like come at anybody here. So take the boot camp, guys. Take the boot camp. Like that's the first step you need to do before you go anywhere or like any live.
I was the same way. Paul Singh, who's my mentor that does our swing trade service, he told me when I came to him, he was like, number one, stop trading because you stink. And he's like, why are you trading? And it's like, well, to make money. And he's like, but you don't make any money. And it's like, yeah. He's like, well, let's finish up your studies and then let's trade. And so, he coached me for a little bit. And then I went back to trading and I'd work with them. But it's just so easy because the allure of money is always there. The allure of money and seeing what everybody else has. So you want to jump in before you're ready. That's what happens with a lot of people. But once again, like you have your whole life to trade. So Harsh, let me ask you this. So, you took class. and then now you've been in ClickFund and stuff. But I mean, besides boot camp class, because that's everybody knows that's a 60-day class. That gets you ready. But there's things that you had to do to come back from blowing up your account and starting off. You started off with your new trading account. You have this albatross in the back of your mind that you blew up your old account. How did you make the transition when you're like, what were you doing when you started your new account and you were trying to eke out profits? Like, were you mentally still really scared because you blew up the old account, or what was that process like?
Totally, I was definitely scared. Even after I lost my first account and then I took the boot camp and everything was going smooth. Even when I took the boot camp, I was being told like, don't trade it like until you finish the boot camp. But I mean, as you know by now, I did trade live. I did trade live even while I was taking the boot camp.
Yeah.
Yeah. So the first time I opened the account after blowing my first account, I was definitely scared, and I was taking the moving averages and everything, like the support and everything, way too seriously, because I was looking at the charts or like a price action in a way that like, oh, if this thing loses this, it's over, game over. So I would freak out. Like, I was not able to like handle the situation. Like, let's say, you know how thin stock moves like up and down crazy, like 10, 20 cents movement in the thin stock. It's not that kind of movement. Like if you in the share, like if you're in the trade with 1,000 share, and if it's a thin stock, it's gonna move like up and down. So you're gonna see your unrealized negative to positive, like 200 to 2, like negative 200 to 200 positive. So if you can't handle, like at first I couldn't handle that. Like it scared me a lot because I've been through the losing period, and then it felt weird at first. Like, what do I do about this? Because like even when I started, like after the boot camp, I was going through the situations where like I was right. I was right. The thing is, I couldn't just go through with the trade. So the mental process was bothering my results like a big time. So I knew that I was like, I have the knowledge. Like I know that whatever Kunal knows, I know too, because he's the one who gave me the knowledge. He's the teacher, and he every day I see him every day pulling out like a big gains, like a crazy gains. So if he can do it, I can do it too. So first thing, guys, like this is the first step everybody needs to like understand. Like first thing, you need to believe it in order to like even get there, that you could do this, like consistent gains every day. Because I'm telling you this from my own experience. After like a 6 or 8 months of losing, it doesn't feel good. It's not gonna feel good. It stings. Like you even not gonna have a confidence. Like you're gonna be feeling like, can I even do this? Is it even for me? Because like whatever you do, it's not turning in your like way. Everything is going against you. What do you do now? But then I figured like I kept pushing, like I kept brainstorming, like what's wrong, man? I can't figure it out. Like I have all the tools, all the knowledge. So kept thinking, and I came to the conclusion it's not my knowledge, it's not the tools that I have. I already have everything I needed. It's the mental process. It's the freaking out part. It's the taking profits too quickly part. It's the like letting losers go away. Because like you were trying to only lose 100 and now you're down 150. So you don't want to lose the extra 50, but you're not getting the point. You're trying to save that extra 50, but you're gonna lose the 1,000 in the end by staying in there. You need to pull the plug right there and then. If it hits your stop, and if you don't use the physical stop, click sell right there and then. Don't even double think. This is how I took my bigger losses, like one of the bigger losses, and that's why I'm trying to like keep telling you from my own experience. Like this is what I've been through when I was losing. Like it wasn't the problem that I wasn't not like I didn't have enough knowledge, and it wasn't the problem that I wasn't good enough. The problem was my mental process. Like we could go through this process. Like I can tell you like what I did, like in order to fix my process. Like there's certain steps. If you guys follow it, I'm pretty sure. I'm not gonna say like this is any one magic trick. Like oh you're gonna be successful from tomorrow. But I'm pretty sure if you follow these like steps that I'm gonna tell you, you guys will see some kind of difference. Like you will see some difference in your trading and in your results. I promise you that. So you can go over that. Like the first
Let's
thing.
do it.
All right, go ahead, Kunal.
No, no, no. I want to hear it.
All right, the first thing like always caused me like to freak out. Oversize my trade. Oversize. Always. I'm the wild one. Like I always think about numbers. Oh, if this thing goes 20 cents and if I have like 4,000 shares, that's $800, man. Let's just do it. Like let's just go in with 4,000. But you're not getting the point. If it goes against you by 10 cents, you're losing $400. It's only 10 cents, but you're losing $400 because you have 4,000 shares. So that's what I was doing, the basic mistakes. Oversizing my trades all the time, freaking out, like all those things. So the first thing I did, and I read somewhere, I'm not sure, I don't even remember where did I read about this? But I did read it somewhere, I'm not sure where. So the thing is, like before you get into any trade, you need to know where is your exit. Like before you think about any kind of profit, like how much you're gonna make or anything, you need to eye the exit. You need to have a rescue plan. Like without any rescue plan, don't even try to get into any trade. Because if it goes against you, you don't even know what you're gonna do with it. So if your brain is not ready, if your brain is not ready for the situation that you're gonna put in yourself, it's gonna react crazy. You're gonna freak out. The finger's gonna slip. So all these things happen when you don't like follow the simple step. So the thing is like you need to know before you get into any trade, you need to know like where is your exit, how much you risk it, like so like mark that thing, like write it down if you're too slow. Or I mean, I'm not saying too slow, but like if you can't do it too fast, just write it down. Like this is my stop, and this is how much I'm risking, and like let's say like you're trying to risk $150. So in your brain, make your brain ready. Like this 150 is gone. It's not in your account. Make like see your account in a way that it's already like minus 150. Like don't count that 150 in your account right now because you're putting the money on the line. You could not get it back. So you want to make your brain ready already before you get into any trade. And that's the main thing. Like it was a magic for me. Like it did wonders for my trading. So I don't know about like if you guys follow this, like we're gonna go too deep, but the basic stuff is this: like you need to know your risk, and you need to alert your brain, the subconscious mind, that this is what you're risking on the trade. So if it goes against you, like get ready, stay ready. Like I'm gonna lose this much. So what I'm saying this, or why I'm putting that much emphasis on like like knowing your risk, because like you're not ready until you control your disappointments from your each and individual trade and control those emotions. Don't let the two trades affect each other. I understand you lose the first trade in the morning. Doesn't matter, the day is over. Like it's all, this is numbers game. You need to look at this. It's like a numbers game, strictly a numbers game. Nobody controls the outcome. Neither me, even Kunal knows. Like he cannot control the outcome either. Like nobody control outcomes in this game. So if you know already that you cannot control the outcome, then why you put in so much stress on the outcome? Put the stress in the process. That's what I'm trying to tell you. You need to put the stress on the process. And what process is, like everybody has different process. Like I have my own process. So I told you what I do. Like right before I get into any trade, if I see any pattern, the first thing my brain does is calculation. Oh, how much I'm risking if I'm getting in this trade with this amount of share, I'm risking less 100 bucks. So if I lose 100 bucks, my brain should not have any pain. No pain, man, no pain. Because if you feel that pain, most likely you're gonna screw your second trade. Most likely, either second or third. Like screw your trade by like I mean it in a broader perspective. Means like I'm not saying you're gonna lose it. Like you're gonna lose your second trade. I'm not saying that. You could probably end up winning. But what I'm trying to say, you would not be able to like follow the process with its potential. Like you would not able to, if it's a dollar runner, you'll be only able to take 20 cents because you are the first loser of the day, and your brain is not used to all this like a fast actions. Like okay, oh you lost the first trade, then you're down. So you're like mentally you're knocked out. You're already out of the game because like in your mind you want to make money and quick everything. So you're like putting so much of pressure on yourself by looking at the outcomes. and that's not the way. I mean, I'm just saying that's not the way for me. It didn't work out for me, and I'm not sure if it works out there for anybody else. Putting the pressure, too much of pressure on yourself. Like play cool, play it free. Like scare money is no money. If you're gonna be scared every time, put it like clicking the button. No, like it's not gonna work out. So when I say scare money is no money, it doesn't mean that you go all in and lose your shirt. No, it doesn't mean that either. The thing, like, you need to find a balance. Where is the balance here? Like where I feel comfortable, like the most comfy in a trade, they're like, okay, okay, I'm losing 200 bucks. I'm okay with it. Like when you say you're okay with it, do you mean it though? Do you mean it from heart that you're okay with it? If you're gonna lose that 200 and you're gonna be okay mentally, if yes, then yeah, risk 200. But if you just saying it, oh, I'm okay with losing 200, and then when you lose it, it's all like upside down in the brain, and then you freak out. No, that's what I'm saying. Half of like people are like, I'm the one who did the same thing for like 8 months. I went through the same problems. Like I'm not bragging here, or I'm not trying to show off anything. I'm just trying to tell you guys what I went through, so it might help you guys, and like you guys can find answers what you guys have questions for. So
So guys, that's a really, really
like I gave you too much
important thing.
information. I'm sorry about that, but
No, no,
I'm
no,
really
that's really
breaking it
good.
down.
So guys, in life, we do the same thing. When I work with my business coach, we always talk about this, the same type of thing. It goes in with everything in really business or life or trading. You can't control the end result. The only thing that you can control is the very specific inputs and processes that you put into it. And if you do all those things right, then hopefully towards the end result will work out in your favor, but it's never guaranteed. So one of the things we track in ClickFund out of all our traders, we have programs, and we have technology to track everybody's behavior. So we've been basically modeling everybody's behavior to get an idea of really what the ideal trader is, where traders are screwing up, so that we can coach people in the right direction. Over time, we're not there yet. We're still statistically modeling everything. But what we noticed was that if a trader loses their first trade of the day, they almost always have a losing day, which is really, really insane, but also makes sense. What's happening is you take the first trade of the day, you lose, and so you're down because like you think that your hopes for the day are gone. But what Harsh is telling you is that the first trade of the day or the second trade of the day, you have nothing to do with it. It is a numbers game. And so all you can do is control in trading your setup, your risk, eyeballing the market conditions. You can control how you view the trade, and then the setup in itself and what type of setup you take. And if everything lines up in your favor and you pull the trigger, there is a strong probability that you will make the trade. And if it doesn't work, you've managed your risk and you'll take a small loss. But you can't control whether it's a win or a loss. All you can control is, do I have the setup? Have I managed my risk? And I noticed that one trade, that first trade, once it's gone, the trader's mentally busted for the day. If they lose their first two trades, they're hitting max loss. No matter what, if they lose the first two trades, they're hitting max loss. And I think that that's really, really important because, guys, it is a numbers game. So, like, I know, like, when I trade, that if I lose 3 times in a row, it sucks and it's embarrassing because I'm on video all day in a chat room and you got to really fess up to everybody. You made some mistakes. But I'll keep going as long as I know that I'm trading normal. If I'm trading wild, then, I'll take a break. But if I was doing the right things and the trade just didn't work out, I keep going because I know if I lose 3 trades in a row, it actually costs me money to stop because the stats and the numbers tell me that if I lose 3 times in a row, there's a good shot my next 6 or 7 trades are going to be winners. Because historically, when I'm on my game and trading my setups, I win 7 out of 10 times. So if I lose 3, I am going to win the next 7 in a vacuum if I'm doing all the things right. And so you have to disconnect with yourself on the emotions of, you know, the numbers of, I mean, the hopes and dreams of it. Everybody gets so destroyed when you lose that first trade, and it's like, dude, you only lost $50 or $100, and it's like, you know, all of a sudden you get this big sob story. And that goes back to the other point that Harsh was making. It's like, if you're not ready to lose $100 or $200 or whatever it is that's your risk per trade, then you shouldn't trade. If it's really making you that nervous, then you haven't built up the competence yet in your strategy and methodology to go and do this really, really successfully. So you need to also keep track of that. Like your emotions of like, if it's making you so uncomfortable, so nervous to risk $100, you know, I talk to my guys at ClickFunnels all the time. You have no business putting on that trade because you can't make a lot of money unless you're willing to lose that $100 or $200. But that's the whole thing about trading, is that we're not really trading stocks. We are trading our hopes and our dreams and our expectations, and that's where the emotions come out. And so you have to really reconcile all those things when you're doing it. I think that's what Harsh did really well, was he had these expectations of, I don't want to be a pharmacist, I've got to pay my tuition, and so those things would cause him to make mistakes. And once he took all of that out of what he was doing and was just trading the stocks and focusing on the process, then he was able to make it. And it's hilarious because we see him in the chat room now, and he'll post screenshots of some of his trades, or he'll have 2,000 share this, and you know, he'll go in and he'll make $1,000 in a day or $2,000 in a day sometimes, and it's like there was a lot that went into it before that, but now he's just ice cold. You know, he's ice cold, and you see it because he's calling out his trades in our chat room live almost all day. You know, when he's in there and he's not in school, and you know, he calls out some crappy ass trade, and he says, you know what? I lost 20 cents, $400. Big deal. You know, I think that was a huge part of making him into the trader that he's becoming. And, you know, he's very much developing still, but you see the signs that he's getting there. And what's good is you're starting to see it. So today we were talking about, he's like, man, I didn't make any money today. And he was so nonchalant about it. And he said, yeah, I lost a few $100. And so that's what I want to see in my traders. Like when I'm backing a trader or sponsoring a trader, you know, I want to see that. I want to see on their losing days. I don't want to see them losing $1,000 or $2,000. I want to see what Harsh did. He trades some size now, but today he lost, and he lost $300. But then the days he wins, he makes $600, $1,000, $2,000. And so now your reward to risk ratios are really, really proper. What's happening with the new trader is when they lose their max loss of whatever is their capability of that day. So in ClickFunnels, a new trader, the max loss is $300 when you're starting off. And so they'll hit their max loss 3-4 times, you know, say in a span of 2 weeks, and then they'll have 5 or 6 or 7 green days. And they'll be like, yeah, but I was green all these days. And it's like, dude, when you win $100. And when you lose, you hit your max loss. And so you've got this ass backwards, essentially. What we need to do is reverse that so that when you lose, it's small. I think that's where the progression that Harsh has been doing. So Harsh, can you tell us a little bit about your style of trading? You know, that's probably something, because I think it's really, really important. I think you found yourself a good style because what you're doing really matches your personality, because you're really aggressive. And you like taking gains and you like the action. So I think the method that you're using fits your personality really well, where if you were doing something different or trading a different type of stock, you would be bored, and that would cause you actually to make mistakes. So guys, it's really, really important to pick a method, a style, the type of stocks you trade, all of those things. They have to match your personality. You know, if you have a disconnect there from where your personality is and the method that you trade, and that causes you stress, your results will be so skewed that you will not be able to track anything, but most likely you're going to lose. I've had a lot of students that say, I want to trade just breakouts. I like breakouts. That's where the money's at. And I'm like, dude, you're like really anxious, like anxious person. You shouldn't trade breakouts. Like it's going to just drive you crazy. And they want to do it. And then when stock breaks out, it goes up 2 cents and they're like freaking out, you know, because that doesn't match their personality. They need to trade a slower moving type of stock on pullbacks that moves in a different manner. They may need to trade a higher float stock. You know, it could be an explosive stock that moves well, but they need a higher float stock that where the spreads are tight and it moves clean, because that fits their personality. I think Harsh actually found a method that really it matches kind of where he is at in life, his age, his aggression, all of that stuff. But give us a little idea of your style of trading.
All right, like if I talk about my recent style, the way I trade now, to the what I used to trade, let's just start with the what I used to trade before, even after taking the boot camp. Like that's why when I say, like that's why when I tell you guys how I used to trade, even after taking the boot camp. Like right after I took the boot camp and I started trading, for a while, like in the morning, a pullback to 9 EMA, that was my thing. Like I was making money with those. Like just wait for the stock, for the gappers, like let them like pop up and let them come back to the 9 EMA, and what I would do, like I was kind of extra one step ahead of everybody in the way that like I would already like figure out the 9 EMA, and I would already put my order in. Like okay, this is my order. I'll already put my bids. Like I want to get in at this price because this is the 9 EMA. So because what happens is like I used to see that before. So this is market. Like every day it changes. You need to adjust to the market. So what used to happen before last year in the summer, that like stock would come to the 9 EMA for a second, like for a millisecond, like millisecond. So if you want to time your entries to the 9 EMA like to the perfection, the only way you could do is like throw in your bids. That's the only way you could get into the 9 EMA on the support by not risking too much. Because what I would do is like if it wouldn't hold by like 10 cents the 9 EMA, like I'll just get out because I wasn't sure about nothing. My pattern was just to play the bounce from 9 EMA. So if it wouldn't work out, I had no business staying in the stock. So that was my thing for a while. Like I made a little money, but then I had a very bad experience one day that the stock like flushed on me. Like 9 EMA, what 9 EMA? They don't know no 9 EMA. So it just flushed. Like the stock didn't even recognize no 9 EMA. So that day I lost like around like 1 grand on a trade that I had 1,000 like shares, and the stock was so volatile and thin that I had no chance of even getting out. Right before you and I say sell, I was down. Cause like that's how the thin stock moves. So that was back then. But now what I do, I barely even keep moving averages on my chart. I don't use them. Like I don't use them in order to find my entries. Nope, never. Just don't. Like I don't trust them like that. Everything is all about like price action. Like you need to see what's going on. Like when look, the way Kunal taught me or everybody in the Bulls room, like it's like when you analyzing charts, it's not all about the upper part, like where it's building the pattern. You need to look at the volume too. Volume is as important as the price action. So if you're ignoring the volume part, you're making a huge mistake. Because like if you're not seeing like what's the story behind the stock, like behind the like what's going on, like what are people doing with the stock, if it's a real buying or selling, like you need to understand the psychology of the stock, like what's going on in the stock before you like do anything, or before you decide you long bias or you long like you short bias, whatever. But you need to understand, like when you're analyzing your pattern, please make sure you analyze the volume pattern at the same time with the price action. And at the same time, if you could handle like multitasking, you can analyze the tape, like which we call time and sales. It could help you if you can like, but it's not guaranteed. Like nothing is guaranteed in the market. So it's all about like you, like first of all, you need to know like what's going on in the market as soon as you wake up in the morning, because you need to adjust to the market. Market is not gonna adjust to you. You gotta adjust to the market. Every day is a different market. no same market like tomorrow. If it's today was like whatever you traded today, it's not gonna trade the same way tomorrow, no matter what you trade. So every day there are different markets. Every day there are like different trade, like different stocks popping on and popping off. So the first thing you do is you analyze SPY, like indices, because they're gonna give you like a major picture, like what's going on, where what everybody's doing. So once you check out the indices, like once you check the SPY, if SPY is gapping up or if SPY is strong or whatever, if SPY is gapping down, you need to know what sector is impacting the SPY the most. Because in order to check these things, you need to like track down little like ETFs for different sectors. Like solar stocks as a TAN, like biotech stock as IBB, like what else? Technology stock as triple Q. So you need to see all these indices, like all these ETFs. What are they doing at the same time? What SPY is doing? If SPY is gapping up, which one is the more ahead? Like which one is ahead of SPY, or which one is a lag in the SPY? Like IWM or SPY. So once you analyze that, you will get the clear picture. Like what do you wanna trade today? Like what stocks you
Ah.
gonna be in? Because you already know like what sector is hot. Like SPY is gapping up. So what other sector is gapping up with SPY? Or like either even percentage or more.
So
What I'm saying?
you keep a list of ETFs in your watch list, essentially, is what you're saying, and
Yeah,
then you're monitoring those.
I already have memorized. Like I know all of them. Like IBB, it's in my brain, so I memorize all of them. So what I
Gotcha.
do first thing in the morning, I analyze the indices. I check which sector is out, which one is the one gonna like run in the SPY today. You know what I'm saying? SPY is
Hmm.
running, but somebody's running SPY. You need to know that. Like these are so many different sectors out there. So if SPY is hot, like SPY is powerful or SPY is like strong today, it doesn't mean that you can trade any stock and you're gonna be able to make money out of it by longing it. Because it's not gonna be the same story like SPY. Because like if you let's say SPY is strong, but at the same time biotech is lagging, and you trying to like time like this biotech stocks breakout, it's not gonna break out like that. Because like biotech overall sector is lagging. Doesn't matter like whole sector is hot. So you need to know all these like little things. You probably think, oh, it all doesn't matter. No, all these things add up. They all matter. Like if you add all these things up, like you could be like consistently every day like profitable, like following your process like to the potential 100%. Like when I say process, means like know your stop. So like respect your stop. Like when your stop, like when your stock hits the stop, get out of it. You have no business staying in it. Like okay, I understand. Like you were only planning to get lose $50, but now you're down 100. So don't be optimistic. Like I hate this word. I hate when I see people in the chat room. Please stock do this. Stock don't do no please, man. Stock don't understand no please. Like when you be optimistic, you're done. You're out of the game. Like stop being optimistic about your trade. Like there is no optimism here. Like trade what you see, not like what you think. Oh, I pray to God, it's gonna come back. No, it doesn't work like that. Nobody cares about your God. Nobody cares about your feelings here. It's all about money. So you need to know, like I'm just saying, like so the first thing I do is you need to analyze the indices to get the bigger picture, like what's going on today in the market. So that's what I do. First thing I do, analyze the indices. And then in the morning, I try to play opening range breakout because they are such an easy play in a way that if you like know how to play them, you can make the most money in your trading, like any kind of trading, like opening range breakouts. Because when stock breaks the range in the morning, it just goes. Like and especially if you combine that intraday opening range breakout with the daily, which like if the stock has a daily which is in the no supply zone, like uncharted territory, you're set. Like you go in these stocks. Like those are the stocks gonna work in your favor. Like you need to know all these little things. Like okay, why daily is important. Like why like how people go through. Because like I know these things. 'Cause I used to get questions from people like, oh, like don't you get overwhelmed handling all these things at one time? Like you try to analyze indices, then you try to watch your stocks, like whatever stocks you have on your watch list. On top of it, you trying to like follow the gappers. So this is like too many things going on at a time. So for some people, it's hard to manage it. So what I
How do
tell
you
them,
manage
like
it?
trading itself, it's very complicated. So you want to keep the things that are like the tools or whatever you call it, tools or things associated with the trading as simple as you could. That's what I like to do. Like if you trying to complicate things, it's not gonna work because it didn't work for me. Because trading itself is a very complicated subject. There is nothing like linear in this. Like there is no green light, red light, as our mentor Kunal says. So you guys need to understand this is the process, a business of a process, not the business of outcomes. Like you throwing money in there just to see how much you're gonna get back. No, no, no. It doesn't work like that. You need to follow and you need to focus on the process. Process when I say how much shares you're gonna get, like how much you're gonna get into what stock, and like what kind of position you get in it, how much your risk. If it goes against you, where is the exit? Exit hits, get out of there. And like you need like sometimes I get like questions about scanning too, so I need to combine like include this too. Like scanning, like they all worry about scanning, like oh, how do you get the stocks and how do you do the scanning? Isn't it too hard, like doing scanning in the morning while you're doing this? Scanning is not that important of a part as far as my opinion. Like that's my opinion. I'm not gonna say that it could be right, it could be wrong.
It's
Scanning is
two
not the most
percent of
important
trading.
part.
2% of trading.
What I'm trying to say is like it's not about like how you're gonna find the stock. It's about once you get a stock, how to play that stock. That's the main thing. Like okay, you already have a gapper, you already have the stock that you wanna play in. But then if you can't even like get 20 cents out of the dollar run, you're just gonna get out of it 10 cents or 20 cents. This is what I mean. Like you need to follow or focus the process. Like once you get in, forget about it. Like don't worry about what's going in your life or whatever. You get in the trade, you gotta focus in the trade. Like what's going, like focus the process. So
So, Harsh, what do you use for like your charting and managing the watch list, the sectors? Because you have to have all this information
yeah, yeah.
aggregated
So
in
I
some
keep
place.
basically what I do. I keep like three charts. Like one is the main, like the bigger one, and two tiny ones. So the big chart, I keep the 5 minute after the first hour of the market. Because in the big chart,
What program do you use for all that?
I have the click, and then for charting, I use sometimes I use Dash because I what I do is like I find a way to do like Dash demo count. So I used to able to like do those 2 weeks demo for like forever. I had a trick,
Yeah,
so, like,
yeah, yeah. I
but
love Dash Trader.
it
It's
doesn't
just so
work
convenient.
anymore. So what I do is like I either I find like some demo counts, if not then now I do have a TC2000. I'm talking about before what I used to do when I didn't have like all this money on the side. Like I
You
was a
got
big
the 2000 Platinum or the Gold?
platinum live.
Man, Platinum is so expensive. It's
I know,
nice.
but man, that's
It is,
the thing they
it is
provide.
so good. I mean, I think it's TC2000 has like everything you need. It's just, man, I wish it wasn't so damn expensive. I used the Gold because I was cheap
Yeah,
for
but
almost 10 years.
but it says the gold one doesn't provide you the real time data. That's what.
It doesn't. I'm cheap, man. I'm Indian. Indian. It was finally Patty Garland that convinced me to go and get the platinum, and it's awesome. It is awesome, but it's a
Yeah,
hundred
it is
bucks.
good.
So
It's worth the money because if you have that, you don't need no trade ideas like Gapper list or whatever because it has
you don't
everything.
need anything. Yeah,
Yeah.
you can manage your watch list and do your scans and sectors and charting and everything
So
uh,
as soon as
off
you
the
get
TC
profitable,
2000.
worth it.
So why don't you walk us through? Why don't I bring up a chart? Walk me through one of your recent trades of like a type of setup that you like to take. Let's go into a specific type of trade that you like to do, and I'll pull up a chart. Anything you've taken in the last so many
My
days.
favorite like go-to setups are like in the morning I said I play opening range, and then around the during the afternoon time I like to play 1, 2, 3 reversals because I feel like those are the very easy go lucky play in a way that like your risk is very minimum because when you buy in 1, 2, 3 reversal, you know you're buying the stock right around the base or the bottom, where the stock bottomed out. So if
Do
you
you have
count the
anything in particular, a ticker or chart for that type of stuff that you've done recent?
you could do 1, 2, 3 reversal like a any 1, 2, 3 reversal I play most of the time. It's like a gap down play. So
Sure. Whatever
it
you've
will
done, any type.
uh what stock recently? Uh,
Just
uh,
give me any type of stock you trade in the last few days that you know type of setup that you used that you liked.
okay, today I'm just gonna give an example of what happened with today. Like ONE1, the stock one that I was trying to play.
Okay. Can you see my screen?
Yep.
Okay. So
So what I
O1,
was
this
trying,
is a
yeah.
base breakout type of setup on the daily. So
Yep.
what were you doing with this thing?
So what I was trying to do is like, obviously I missed the whole big run up you guys see like from in the morning, the 10 a.m. to 11 a.m. because that stock wasn't on my radar. So like, you always gotta wait for the stock to come back or like make a base or a flag or some kind of thing, like either a triple tapper or give me some kind of reason to get me in the stock. Like if the stock has a more like a buying pressure, the stock could go a leg up, like higher. So the way stock was this stock was moving today, like it was moving in a way that like I really thought the stock had like a pressure, the real buying pressure they needed to go and bust like crazy a leg higher, at least up to like 550 or like $5 or six, because like you see that Kunal, like he just drew a line like it was flagging. It was a triple tapper around the HOD. So what I was trying to do is like I knew like the stock like it has a potential because I see this daily. It's breaking out the base. So the base breakout are the like the most powerful breakouts. Like when they broke out, they really break out. They go. So that I had that thing in my mind that it's a base breakout. So I kept pushing my luck. And then what happened is I knew this thing would like at least need a 2 or 3 taps. It's not gonna be ready like as soon as they like had a big run up. I knew that it's gonna pull back to the 90 EMA, but that's not even the like as soon as it pulled back to the 90 EMA, like I waited and I was trying to get into the like 90 EMA, pull back to the 90 EMA, but I wasn't sure if it was gonna hold or not. So I just let it alone, and I thought like let's see what's gonna happen around the HOD, because like if the stock wanna make a second leg higher or a second run or a post lunch run, you need to see the main thing you need to see is how the stock is behaving near its previous HOD, like the morning HOD. If the stock's gonna break like the previous HOD that it had in the morning, like by combining that like HOD behavior with the like a triple tap or a flag or any sort of thing, like you need to have a strong case before you get in. So what I did is like I saw this stock had a run in the morning, pulled back to 90 MA, then it went back up again HOD the second time. It came back, it failed its HOD again. I knew it was gonna fail because 2 taps is not enough. The stock already had the 10% move in the morning, so 2 taps not gonna do it. So I
Yeah,
knew it was
yeah.
gonna come back again to the same spot it came before to get the support, to get the breather. So as soon as the stock holds the previous low, like I knew the stock has a run in it. So as soon as the stock like bounced right here around like 435, around like 440 area, that's where I got in. Stop right underneath 4.3, like 4.3. You
Yep,
guys see
I
how
see
much I'm
it.
risking here to
Ten
get in
cents.
like potential of like I'm not sure if this stock would have went today, it would have definitely got to the like the five, like a whole number, because it's a base breakout. So I mean, I'm pretty sure this stock's gonna be in play tomorrow too.
So, guys, base breakup formation is it's actually something that I dusted off now. We didn't use it for a long time, and then after this market, um, in the spring when the market really consolidated for literally months, a lot of stocks got crushed down, and then when the market broke off, what it happens and why this kind of setup works is that when the market comes out of range and it gets really extended, people start wanting to buy all the stocks that are near bottoms because there's only a handful of them, and they start chasing performance, but you don't want to chase something that's too extended. And then the market gets more extended, and what happens is now traders are looking for anything that hasn't moved. The speculation, spec money starts coming into all the cheap names and all the names sitting on bottoms because those have the lowest risk because the market is flying, the stock is in a base, and so you can really manage your risk. And then they start flying. So you see like these stocks jump out of nowhere. So like something like USU, really sat here all spring in the $3, $3.50 range. And then it has a PR or something that brings it out of the bottom range, the base breakout, and then momentum just takes over. That PR might be worth 50 cents on the stock, but once momentum takes over and the traders start to pile in it, sensing that this is a stock on the bottom and it's coming out of it and potentially starting a new trend, you start to get these monster runs. So like, we killed USU. We just killed this. Everybody in our chat room just nailed this stock. When the PR came out, and this is what Harsh is talking about, this one moved like one. What Harsh was looking for in one, USU actually did. So you see the PR, it comes out at $3, and it runs to almost $6 here. And then from 10:30 till 12:30, it just consolidates. It consolidates for a period of time. And so what we did in the chat room was, I bought 5,000 shares or 4,000 shares, I forgot the exact number, right at 517. And then I love this type of play because my risk is only 10, 15 cents max, as my stop will go under support. And then it's just off to the races because you have that base breakout. You have a PR that's taking it out of the base. And then when you combine volume and float and catalyst, you get this superstorm of traders piling in this bad boy. And you can get these stocks that go from $5 to $12 in a hot second. I mean, we made so much money on this thing. And I actually sold this thing at like $7.50 my last shares to go to the beach, and then this sucker just ripped again. This beach has cost me a lot of money this summer, I'll tell you that. But it's summertime, right? What are you going to do if you can't go to the beach? And the same thing. So DRL was the same type of setup, that Harsh is talking about that he likes, a base breakout. So you got a stock that was a high-flying stock, $25, flies all the way to under $2, and then spends the next couple of months just consolidating near lows in a base. And then what happens is when it finally comes out of range, you get these monster moves. So we, in chat room, all of us, Harsh is probably in this trade too. So we know that this $5 mark is the huge number for the base breakout. So in the morning, the stock pops up from $4 up to $4.65. And then it just consolidates in a period of time over here for a couple hours in the 460s. And so when it comes out of range, we get our first buy. And so we added this thing at 464, and off to the races it goes. And then you can see what will happen if the volume comes in and the momentum takes over. You can keep playing it intraday and keep adding to your shares. And so you get a flag here, and boom, it runs to 7. And this is the type of stuff that you're waiting for. And this is what happens in the bull markets. When I was going through the click fund trades, man, I was sick with it, seeing some of the people sell this type of stock for 10 cents and then never get back into it. It's like you only get a handful of really good opportunities during the week, and this market is giving them on a daily basis. But as traders, you have a responsibility to be, in these trades. And, we even added it again later in the day. Harsh, too. Harsh gave me the idea. He's like, man, I'm hitting this thing at, 620 you added this thing? And I added 5,000 shares at 640. And, boom, this thing ran to 8 end of day. But that's the power of the base breakout formation, especially if you have a catalyst. It's badass. What other type of setups besides the base breakouts do you like, Harsh?
In the morning, I like to play the flags in the morning, and you just said it, like all the consolidation flag, like the stock who already had in the morning a big run up, then it's gonna consolidate like pretty much all day, and then around the lunchtime, like two after the lunchtime, around 2:30, that's when the stock's gonna have a second leg higher. So those are like a very easy go lucky play. Like if you know, or if you like train your eye to spot them, they're very easy to spot. It's like no magic science in this, like no rocket science.
Mm-hmm. Awesome. Do you do you have any specific scans set up in your TC or in your
Mm,
TC 2000
no,
that you like to run
I go
intraday?
for top 20s, top 20 gainers and top 20 losers. Not much.
Me
Just
too. So you can see here, so this is TC 2000. I have this layout that I have here on the bottom called PEX 2 that was named after Josh Block, one of my friends who made it for me. And same thing, I have 4% breakdowns with volume, and then I have 4% breakouts, and then it's just really about, flipping through these bad boys and making sure that making sure that you're able to participate in them. So you don't have to do much, it's not much to it. You can run other scans. I have all sorts of scans for flags and stuff like that, but you don't really need that many. You just don't.
like the thing with me, as I told you earlier, like I try to keep the things associated with trading, like other than trading itself, like I try to keep it simple. Because for me, it gets very complicated. So I mean, I understand the technology and everything, like it's very helpful, but at the same time, I want to keep the whole process simple. That's my main motto. Because like if I see like some of the gappers in the morning, it's like I'm gonna remember most of them. So I'm not even gonna need to look at them again. I'm just gonna flip through because I already have those in my brain. So I like that style. It's easy for me. Like some people probably like put more focus on the scanning, which I don't. So whatever suits your personality. With me, like I try to keep things simple. Like simplicity is like the best thing for me. If you keep it simple, it's good and like it works for me. So
Nice. Hold on one second, brother. So, okay, so let's talk about future. So, one of the things that make more money is that you have to start increasing your size in your trades and things like that. So, what's your game plan from, going from trading, a few hundred shares? How do you get bigger in size? What's your process for that? Because obviously you don't just start off trading 3,000-4,000 shares of stuff. I mean, you can, but you'll lose. What's your process for that?
it's as we were all being taught by Kunal in the boot camp that you guys need to start it out with the smaller position. So if you start out with the smaller position, you'll be less scared and everything. So you'll be able to follow the process and everything. So what I did is like I went backwards. I went like buck wild in the beginning. Like I was going 3, 4,000, and 1,000, 2,000. 1,000 was my minimum share in the beginning. So it was a bad habit that I was doing, and I was putting myself into danger all the time. It wasn't good. So I had to go back to the basics, what Kunal taught me. So I started out with like a 150 share amount, and then I bumped into 250. Every 2 weeks I get positive. I let my share size go like by 150 more.
Yes,
So
that's how you do it.
yeah. So let's say if I get the A plus setup and I have a confidence from like last 2 weeks of a profit that I had good 2 weeks, then I'm gonna go in like with like the max amount of shares that I decided like this is what I trade. This is my max number. Like I'm not going over this. So I will go all in if I see like A plus setup. And if I see like okay setup, and if the risk is higher, let's say opening range breakout. So those kind of play, you don't need a lot of share. You only need 2, 3, or 400 to the max. If you only have a 400 share, those opening range breakouts, everybody knows who plays them. They're very powerful. they'll easily give you 50, 60 cents. So even if you have 400 shares, think about how much profit is there. You don't need to go 1,000, because the thing is, if you go 1,000, those range in the morning, they act wild. So even if they're in the first 5 minute candle, the first 5 minute candle could be $1 candle, the range. So if you have like 1,000 share and the stock is $1 range in the first 5 minute candle, you could see yourself down 1,000 unrealized gain. And I feel really like strictly uncomfy seeing myself down $1,000 after losing those money. So I can't be doing that anymore. So that's why I go in. If it's opening range of wild stocks, thin stock, 400 or 500 is the max number of shares that I go.
That's so true. So that's something that, you know, Mary Beth, everybody, you know, we work on with them to this day. So to trade large size, to have 4,000 shares or something, you have to not be affected by your P&L. So most traders, the reason they lose is because they trade their profit and loss statement rather than the stocks. That's one of the main causes for the loss. And so when you trade too much size, you're really focused in on your P&L of what's going up and down in your account. Because number one, most of you guys have very limited amounts of capital, and then all the ups and downs of trading too large a size, it's moving your account back and forth 10, 20% because you only have a few $1,000 sometimes. And so that causes you to make bad decisions or make the not good decision on the stock. So rather than trading the stock well, you're so focused on your P&L. So what we do in ClickFund is we start everybody off with certain share sizes, and then every 2 weeks, if they're profitable, we up the share size. And so then what happens is you go from trading 300 shares to every 2 weeks you're slowly building up. You have to earn the right to trade size. That's huge. You have to earn the right to trade big size because nobody is some type of master baller right off the bat. If you're trading that huge size and you don't know how, you haven't earned it. You shouldn't be doing it. You're not going to be able to handle it. I know I couldn't do it for a long time, and to this day I don't trade huge accounts because I stink with size. You know, even now I'm trading over the last few years. You'll see even from when I first did the first boot camps to now, like I trade much bigger size. But it's been a span of 2 years. To this day, I slowly increment my growth in trading size so that I'm not freaked out by the P&L. Because when you trade 5,000 shares of a stock, you should act the exact same way and feel mentally and emotionally the exact same way as when you have 50 shares of a stock. But guys, that's not reasonable to think like that. It's not logical that somebody can just dull themselves or control themselves like that. Because 5,000 shares and 50 shares is a huge difference, and it is going to just totally mess with your brain. It always will. But you have to be able to handle it. And so the best way to do it is to do it over time so that you don't even notice. So you go from trading 300 shares to then 500 shares max. And then if you're doing that, you might not notice if you do it over the span of a few weeks to a month. You won't notice the difference when you're trading 500 and 300. Then you're profitable some more. You're building up your account. You're building up some confidence. You're building up your repetitions. Having trading repetitions and screen time is so important. You need thousands of repetitions to really get comfortable. So now you're building up your repetitions, your account, and your confidence, and your mastery of the method over time, slowly by slowly, day by day. So then the next month, you're trading 750 shares max. And then a month after that, you're trading 1,000 shares. And then next month, it's 2,000 shares. And the next month, it's 5,000 shares. And because you did it over time, and during that time, you increased your confidence, your mastery of the method, and the amount of repetitions where you've seen all the angles now because you've been doing it for months and taking so many trades, you won't notice, as much as you can dull your senses, you won't notice the difference between when you're trading 5,000 shares and you were trading 500 shares. It will feel very similar. And you will have a good enough process and enough repetitions under your belt where you're not going to get freaked out, and you've seen all the booby traps that are in the market. Now, by the time you're at this point, you've seen the booby traps, and you're able to handle them. But you can't get there overnight. It's a process, and it takes time. And I think that's really, really huge. And that's one of the things that, we do with ClickFund and stuff like that. So, like, Harsh now is a profitable trader, and, even then, Harsh is a profitable trader, and, even then, though, I mean, we're on his ass. I got to be on his ass because, the only way I'm going to make money is if he can trade a $200,000, $300,000 account, and he's making money every day, and I can get a piece of the action. So I have a vested interest in making sure that he scales up his size in a logical and methodical way. Otherwise, I'm going to take a bath, and he's going to be mentally ruined as a trader. And you can literally ruin yourself mentally as a trader if you trade too much size and you get, you trade too much size and you just get too crazy right away. And I think that that's just so huge. You need that. So to make money as a trader, of course, you need a method. You need a good method. But the other thing that you need is capital. That's capital. So if you have $2,000-3,000 and you think you're gonna make a bunch of money as a trader, it's very hard, next to impossible. Because think about the percentage terms. Most people have a hard time making 10% in trading, and you're gonna make a bunch of money with a few $1,000s. Not gonna happen. And so what we do at ClickFund is we give capital to our students. So as they're profitable, we take up their account size and give them more and more capital. So like Harsh, I gave him some money to trade because he owed me boot camp money, and I had this new program going on, and I knew that he was gonna, with some coaching and some love, that he was gonna be a great trader. And so I had no problem backing him. And for the rest of his career, year down the line, he said, "Can I need $1 million?" I'm gonna say, "No problem. Give me a piece of the action. You're gonna get $1 million." Because we're gonna work our way and build up to that. Mary Beth, she trades a $500,000 account. She has $500,000 of buying power right now. I assume all her losses. She gives me a 20% of it. And she started off small, though, and we grew her account, and we grew how much she could trade. Because to make a lot of money trading, frankly, you need capital. It's not impossible to build a small account, but it takes a lot of time. What's better is to learn how to make $50, make $100, finish in the positive, and every 2 weeks we add capital to your account so you can trade a little bit more size and make a little bit more money. And then it becomes kind of a win-win for everybody. I think that it's really one of the ways to go, because otherwise the barrier of entry to trading is so hard. This game is rigged against you because you're playing against sharks, against real professionals, where there's no rules in finance. And then most people come in with the lack of education to compete against the best and the brightest in the world. Think about the smartest, most ruthless people in the world go into finance, And so you're competing against the best. You need education, but then you need capital. You need capital to make this happen. And that's huge. And so that's a great apparatus that we put together at ClickFund for people. And, guys, you can click here or email me if you ever need more information on how to trade with us and stuff like that. But, I think that's the future. That's the future of people banding together and working together. We're going to open this thing up to some questions. Harsh, you got some time?
Yeah, definitely.
All right, let me find Willie, too. All right, what do we got here? Hold on, brother. Dun, 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 dun. Questions. So Charles Zorbo, my man. Charles wants to know, do you use the indicators DMI? I personally don't. I'm not familiar with them.
Yeah, me neither. I don't know. Like, I don't use it, and I don't even know what DMI is. So
Me either. So Charles, there are literally hundreds of indicators, and there's no indicator that's really right or wrong. It all depends on your system. You have a set of indicators and tools that you use in congruence with your own personal methodology and system, and if you do, then they can work. And if they don't match what you're trying to do, then they typically won't work. It's just a small piece of the puzzle. Let's dun 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 dun. Min wants to know when you're trading live, first trading live, did you make your stop loss orders like immediately after you buy a stock, or did you use mental stops? How do you do that?
if he's talking about before, then I had no stop. I wasn't using stops because I wasn't aware of them. Like I didn't know that you need to keep the stops. Like if the stock goes against you, it's gonna protect you if you have a stop. So I didn't know about that. The first month that I traded, the month that I blew my account. So no. But now I keep mental stop for thin stocks, and for the stock which like a lot of liquidity, like a big float stock, I keep them in the system so they can take me out. But with the thin stock, with the thin stock using the mental stop, the science behind it is like the first thing I don't go big. If I know the stock is thin, I'm not going big. And the reason I'm putting the mental stop because they're thin. They're reason for a thin. So when they act, they're gonna act a little choppy, like up and down. So whatever stop, no matter whatever stop you choose, oh, this is my stop. It's not guaranteed, or it's not like the chances of you coming out on the profit side of the trade, like you're gonna be profitable. It's like minimized when you put the stop in the system, because it could hit any time when a big seller comes in the market, and if he throws a 50,000 share, like a whole block, and then your stop's gonna be like activated and you're gonna be out. Because the thin stock, it's like any big seller comes in, if he throws in like 20,000 shares, like, I wanna sell 20,000 shares.
Yeah.
Like you're gonna get stopped out. So that's the reason I don't keep them like physical stop. When I'm like specifically I'm trading the thin stocks that I know, because they don't follow any certain level. It's very hard, even for professional. They can like it's just thin. Like they don't have that many shares out there. They fight for it. So.
Ian, my man, my brown brother says, I'd like to know more about entries in a trade. What points should we consider? So, Ian, entries, there's no right or wrong answer. Entries all are dependent on setup.
Mm-hmm.
So each different type of setup that you trade, whether it's a flat top breakout, a flag breakout, a base breakout, the entries will change, and they're completely dependent on the stock and the setup. There's an infinite number of variables that go into it, but the key is if you can become setup focused, that will tell you how and when and where to enter specific stocks when they show specific patterns. Jim McCollin, doesn't this spiel to sitting out for the first 10 minutes of price discovery? I think Jim is saying, why not sit out the first 10 minutes of the day?
Yeah. You could, Jim, like you could sit out like first 10 minutes. It is a wise thing to do. But then once you get good, like once you know how to trade the first 10 minutes, that's where the real money is sometimes. Like action happens really fast. Like
it's the wrap. You got to trade the open. If you can't trade the open, then you're going to be a grinder your whole life.
Yeah, because like when you trade open, your unrealized gain could turn from 0 to 500 in a matter of like a second. So that's the kind of action that I like. So I trade like the first 10 minutes.
Price discovery, you're true. So at the open, you can't really tell when and where something's going to go sometimes. They always overshoot. Like you see a stock like EVRY a few days ago. The stock spikes up like 100% the open, and just fades the rest of the day. But if you can catch them at the open and understand how the mechanics of trading the open work, there's big money. I know a lot of traders that trade the first couple hours a day. That's where they make most of their money, and then really the rest of the day they're just kind of hanging out, making watch lists and stuff like that. Ian wants to know how to place orders by watching level 2. Should it be on the price with more orders? Ian, that's a 5-hour question in itself, but I personally don't trade off level 2. I don't click the things and try to trade off of it. If anything, most of the time, a lot of times level 2 can be fake. It can be useful in specific circumstances, but
I was going to say that. You
it's
need
not
to
a
combine.
linear answer.
Yeah.
Hey, Sophia, how you doing? Sophia wants to know when is the next 4-day class. I believe it's July 14th, so this coming Monday, so a week from now. Dun, 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 dun. Okay, this is a good one from Elaine LeBron. Harsh, do you scale into your positions or do you go in one shot?
So yeah, this is the thing that like, let's say like if the stock is doing what I've been wanting to do, like, cause like typically if I'm watching the stock since morning, like I'll be able to know like how stock's behaving, like I'll be thinking about, oh, this stock's gonna bounce here, it's gonna be like the bounce gonna get faded here. Like I'll tell myself it's gonna happen, and if it's happening, like if the stock's doing what I want, then yeah, like I know the stock is behaving the way I want. Then I'll go all in, like at first, like I'll just go 400, 500 shares. But if the stock is like kind of inconsistent in the behavior, like it's respecting its 90 EMA, it's not respecting 90 minutes at times. Sometimes it's respecting 20 EMA, sometimes it's respecting 50 EMA. Then what I would do is like off of the price action, I'll just put in like initial position, like a 200 shares, and then as the pattern gets more and more stronger, more and more tight, I'll add up right before the bigger move about to happen.
Dun, 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 dun. Hold on here. So what else we got? Elaine, for your fund traders, what kind of daily stop loss do you use? Elaine, it's dependent on the trader. But in the beginning, everybody's on a $300 max loss, and the trader can choose. If they want to start really small and just risk $100 a day or $200 a day, we can adjust it accordingly. And then certain traders, like I use a $2,000 max stop loss on my account. We put a $5,000 stop loss in a Mary Beth's account. She tends to trade a little bit more wild than me. I notice that Mary Beth is like, she has the opposite. I'm hot in the morning, and I kind of like sit around all day because my mind is on business and getting out and playing some basketball and stuff like that. And Mary Beth tends to feel her way out at the open. She takes stabs, and she's okay losing $1,000, $2,000 at the open because it's just a drop in the bucket compared to what she's trying to do for the day. And then so we have to keep her stop loss a lot looser because she likes to take stabs and feel her way out, like get a feel for the market and the stocks. And so she's okay taking a little bit of a loss to make her way. For me, I need to, psychologically, I need to start off with the gangbusters. It gives me the energy to keep going. And so I like coming in hot and really bringing the heat with everything I got. And then, we go from there. Oh, dun, 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 dun. Hey, Tom, yeah, the webinar will be on YouTube. Meg and Matt, how you doing? What is the minimum amount of time people spend trading over a month? Minimum amount of time. I'm not sure what that question is. If you don't mind extrapolating on that. Trade Daddy, how long is the boot camp? So our boot camp is 60 days. The first month is coursework. Where we're going in 4 days a week at 8 p.m. Talk about every strategy that we want to. The second month, we do trade review sessions where we log in after the market, and everything's recorded, and we go through every single one of the trades that I took. So like today, I took a bunch of trades. So we go in, and so like today I made $2,600 or whatever. So then we go in and we talk about exactly how and when and why and how. All of that stuff of how I found these stocks and how the heck I got into them. We reverse engineer them essentially. And while you're doing that, you're going to be making business plans and practicing on a trading simulator. So we put the traders on the simulator while this is going on the second month so they can start getting their repetitions and practicing exactly what they learn. And then from there, once they graduate and they pass their quizzes and courses, you know, we open up the accounts at ClickFund, and they start trading our capital. I think Harsh's internet may have cut out, so we'll have to wait a hot second for him to come back in. Boom, 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 boom. Okay, my man Walter, what's going on? How you doing, sir? So Walter wants to know, what are the steps to, you know, trading inside the fund and things of that nature. So typically, and it goes a few different ways, but typically our average student will come in, they'll take our boot camp class, and you know, they'll spend that 60 days just working their butts off. And during that time, they're going to be working on their business plans. We'll be tracking their simulator results and things like that. They'll be posting their simulator results, their trades, in they'll be posting their trades on a website where a lot of the students can comment, and so you're fine-tuning your trades. You know, that's really, really huge. So when you're fine-tuning, one of the things about the simulator that is important, I think, is that data collection and trading is key. You have to know what you're good at. You have to know what you're good at, and so you need to collect data. So what that means is, as you're in the simulator, like I teach so many different setups in class, like Harsh knows dozens of setups, but you have to know the 3 or 4 or 5 that you're really good at, that you can extract capital out every single day. We call them our go-to setups. You need your go-to setups. Your old faithful. Like I know if I'm in a slump, I got to chill for a bit, and if I see my old faithful show up, it's a slump buster. That whenever I see a handful of different setups, I know that I trade these with 80% probability, and I trade them well. And so I hammer those type of setups so I break out of my slump, and then, you know, I've got the slump buster, and I go back on our way. And so I think that's kind of, you know, the way we do things. And then from there, you can trade inside ClickFund, and we start progressing you as traders. You know, some people, they'll never be able to trade more than X amount of capital because, you know, it just takes time to work things out. And some people come in gangbusters and do real well, you know, but the key is to be methodical and work in a structured system, and start, you know, growing your skills and then growing your risk. Harsh, boom, 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 boom. Hold on one sec, brother. Mm-hmm. How many? I mean, in terms of your toolbox of tricks, I mean, how many setups do you typically kind of have that you're always using?
I've been using like pretty much all the setups that you've been taught. I'm gonna name them one by one. Red to green. Opening range breakout, opening range breakdown, then all-day consolidation flag breakout, then daily base breakout, daily breakouts, then flag breakouts, like triple top breakouts.
Yep.
So all these setups, like it's just like once you're gonna get good at it, like once you get a hang of things, you're just gonna know, like your eyes gonna be trained. Like you're gonna know this is what I learned. Like I have seen this. Like I know this. You're gonna associate yourself with the setup that I know this.
Romy wants to know: do you ever use trailing stops?
Nah, I haven't used trailing stop before.
Neither.
As I said earlier, I try to keep things very simple associated with trading. Anything, if it's like a trailing stop or putting the stop, if it's a simple like I'm gonna try to like put it simple and like not make it too complicated, because like too complicated things makes it worse. So.
Yep. This is a good one from Walder. How do you manage college time and trading? What were you doing with that?
Yeah, like when I was in college.
And a girlfriend, and a pretty girlfriend, so you got to keep an eye on her all the time. I bet she's just out and about getting cat calls from people.
Yeah.
I noticed that every time she posts on Instagram, one day I clicked all her likes, and it was like, you know, she posts a picture on Instagram of herself, she get like 150 likes, and then you go through it and it's like all dudes. I'm like, oh man, he can't even let her out of his sight.
Yeah, but when I was in college, I wasn't trading like uh, full time. Like I was only trading full time when I had off days. Like let's say I have like Memorial Day weekend or I have any kind of long weekend or whatever. So I wouldn't trade like full time when I was in college, but I do trade full time now since I just got done. So
All right, all right. Dean Goots wants to know, how do you pick the stocks you trade for ORBs? Like, where do you find them?
those are the stock like basically the morning gappers, like 4% gappers. Those are the stocks gonna do ORB basically.
Gotcha. Romy wants to know, how much of your trading is day trading as opposed to swing trading?
I haven't tried swing trading like that yet, but what I would do just to like get a grip on it, it's like I would buy something in my brain, like okay, I bought it just to mark like a buy point, and then after a couple of days, I'm gonna see how it goes. So like just to like get a grip, that's it. Like I'm not doing nothing physical trading, like swing trading, only day trade so far.
My man Clayton Yee wants to know, what are the most important things that helped you develop your own style and transition from your initial 9 EMA setup?
Just to like live and learn. This is like a game of adjustment. Like if you're gonna be good at adjustments, like adjusting yourself to the market or adjusting every day, like you learn a new thing, you need to tweak your strategies. Like okay, like when I realized it, like okay, this 9 EMA bounce in the morning, it's not been working like consistently. I need to like lay off that setup. It's not no setup. Like I need to stop playing that. So this is how you like when you try something, you keep trying. It's gonna work for you like a 10 out of like 20 times or whatever like data you collect. But what I'm trying to say here is like do whatever works for you. So whatever doesn't, just take it out. So this is how you like build the whole process, like a step by step.
Word. Dun 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 dun. Tom wants to know, how long do you hold a stock and what is the optimal hold time?
Yeah, as I said earlier, if the stock's not doing something that I want to like see it should be doing, I'm out. Like I already before I get into any stock, like I already have my level like eyeballed out. Like I know my level. If this stock loses this level, I'm out, and that level's gonna be definitely as me being a rookie trading this account live. I keep my entries like right near the supports, like levels, like 10, 20 cents off. So if the stock loses that support, I'm out. So there is no like a fixed time for me. So if stock don't do whatever I want to do, I'm out. So basically, there is no fixed time here.
Rock and roll. Peter, dun dun dun. This is going. Jaden, my man, what's going on? Jaden's from Australia. We'll have to answer his question first. This got to be his bedtime by now. Australia. Jaden says, I'm having issues picking the right stocks to watch at the open. I'm missing all the action. Well, Jaden, first of all, I'm always calling out the hottest stocks at the open. So that is just full-blown retardo over there. Because we tell you which ones are going to be the hottest ones. But on the other side, Harsh, do you have any suggestions on how to pick the hottest ones for the open? I would say usually the hottest ones are the ones that have the best dailies, typically.
Yeah. So basically what I do is like before, like in the morning, I would like take 20 minutes before the opening. So let's say market opens at 9:30, I start my prep around 9. So what I do in my prep is like I check out the gappers. So when I check the gappers intraday, the main thing you gotta do is like check their dailies. If the stock is gapping up to the like uncharted, like unsupply, like no supply zone, then that stock is on my top list. Like I'm watching this stock like a hawk. Like I'm not missing out on that stock if that stock is doing ORB. So that's how you like order your stocks. Like whatever stock you're watching, like put them in the order that like the knowledge that you have, analyze them. Like okay, this should be the first one, this should be the second one. Like according to their dailies and intradays. Like even in the pre-market action could tell you something. Like if you go through them, they're gonna tell you something too.
Oh, my man, good stuff. Peter Stark, my man Peter was over. Actually, Peter's from Tampa. Peter came to trade with me, I think 2 weeks ago. He drove down here 6-7 hours to come trade with me for 2 days, staying in the bunk bed room over at the Bulls on Wall Street house with Tim and his girlfriend. But great guy. Peter actually got to witness something that only happens a few days, really a year. He watched me lose a bunch of money. I was off my game that day. I was like all excited too, I was like, and whenever I guess, I never lose in front of guests. Because when you lose at some point, it's always mental errors.
Yeah.
It's not because, sometimes stocks don't work out. Totally going to happen once in a while. But because you take so many trades in a day, it's just a numbers game. Yeah, 2 stocks don't work out, but the other 8, if you do the right thing, will. So it's always, if you lose at this point, it's a mental error. It's not because of the market or anything. And so I never lose in front of guests. And Peter got here, and I threw out fucking beanballs, one after another for a whole morning. And then I was like, I think I'm done for the day. And we went and goofed around a little bit. But so he got to see something that's very rare. I thought that was really funny because I was really nervous at first. I'm like, man, this poor guy drove all the way here, and here I am throwing out these jalopies today. And it ended up being kind of a fun thing. Peter's question is, I noticed a lot of fluke candles recently, which would normally stop you out. Then it bounces back to where it was. Do you ever give it another candle to see if it's a false breakdown?
So, can you repeat the question? I didn't follow it. I'm sorry.
Okay, so what he's saying is that oftentimes he's in a stock and he gets wicked out, and then the stock goes back to where it was.
So the thing with that, like, it's the same question that I like. Not the question, but the answer I already gave you for this question. It's like, if you're getting into stock that it's a thin one, just don't keep it like a stop. Because as long as the stock is like doing whatever you want to see in the stock pattern or the chart, if it's still in the pattern, it's okay. But if it's a thin stock, that's why it's going to move the way you're saying it's going to move. Because, like, let's say one big seller came in and he's in a rush and he's just trying to get rid of his 50,000 shares because he just want to get out of there. So once he sells that 50,000 shares, you're going to get stopped out in the VIX if you have the stock. So that's what I'm saying. If you're trading the thin stock, it's better off not putting the stock. But then at the same time, make sure you don't position yourself like too much because you're going to take bigger losses that way if you do.
Yep. Sawan, do you sign up for boot camp to participate in ClickFund? Sawan, the ClickFund comes with the boot camp. You have the opportunity to trade in the ClickFund after the boot camp. But if you're already a good trader and you can prove it, you can totally email me, Kunal at KUNAL@BULLSON.WS, and you can go over your results with me and I'll take a look. Otherwise, this is typically the direction that we take things. I mean, there's always an exception, but for the most part, that's kind of how we do it. Harsh, my man, Pastor Blake Weber is our Bulls on Wall Street pastor. He's a young man who happens to be a trader / pastor from Illinois. And for a pastor, I'm just going to say, and I hope that he doesn't really sin me for this, he's got a super hot wife too. So he's got like the perfect trifecta. He's a Midwest man like myself, like both of us. He's a pastor, and he's got a super hot wife, and he's a trader. So Pastor Blake wants to know, how do you deal with the mental hurdle when you feel like you're consistently talking yourself out of taking what would end up being good trades, but still taking the same setups that turn out to be the losses? So this is the age-old, kind of like an alcoholics, gamblers type of thing. Because me and Mary Beth were talking about this. I would say, oh, if I just took this trade, I would have had like this hugest day. Or if I didn't have my max loss, then the stock, I could have taken a little bit of a loss and the stock would have came back. This is very true. So what Pastor Blake is saying, Harsh, is that he sees really good setups and he gets scared. And so he doesn't take the setup. But then, right after that, he'll see like a real dumpy setup, and he'll take it, and it'll turn out to be a loss.
And then you'll screw yourself more by taking the third trade, which will be a garbage, because like you missed out on the first profitable one that you saw. It was a good one, and then you missed out. Then you took the second one, which was not the best setup, and you lost. So the outcome of those two trades gonna be your third trade most likely is gonna be garbage. You're gonna be just getting into something like out of desperation. So
So what that's called is FOMO. FOMO, fear of
you're
missing
missing
out,
out.
is what it's called. In that you got scared, so you didn't take one. And then you see all this stuff running, and you see your screens lighting up, and so then you have to take something because you don't want to miss out because you know you just passed up on the big winner, and then you get into the garbaggio.
Yeah. So with that thing, it's like you need to understand, like this is a market, a best market in the world, like U.S. stock market. So if you miss out on a one stock, it's no biggie. So don't like keep like don't beat yourself over that. You always gonna find a second one out there. But if you're gonna keep beating yourself over and over again over that one stock, you're missing out 10 more. So you choose the option what you want. You gonna miss out on the next 10 one, or you would just wanna like keep regretting, oh I missed out, I missed out.
Yep.
So move on. Like in the morning, everything happens fast. So if you miss the first one, either follow the stock, like keep watching it, and wait for the second entry. Like in a way, when I say wait for it, like it doesn't mean that you jump on it like anytime. Wait for it to like either start to come near the support or let it do something like whatever we've been taught in the boot camp. If you have taken the boot camp.
Boom, 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 boom. Ronald saying, so can you join the boot camp and get in ClickFund and take payment plans? Yeah, Ronald. So while we have our students studying, they'll be making payments, and so the whole point is to get into the program, and we'll work something out. We're not that big sticklers on the details of it, so sometimes it might take months to study and go on the simulator and all of that stuff. And our students, they're just on payment plans. We have some students on $100 a month payment plan. And it's like they spread it out. The key is we'll always cut a deal. Mary Beth over here, you can see her. She's a nice person. She'll work something out with you. Just send her an email or click that registration page, and she'll give you a call. And I swear she hasn't said much today. She's acting a little bit creepy. But Mary Beth, just say hello to everybody if you don't mind.
Hey guys, sorry. I've been answering emails and questions as good as I can. One person thought I was a guy, actually. I don't see how they get that by looking at my picture, but I'm just kidding.
That is funny.
No, but for anyone who doesn't know me, I'm Mary Beth. I was one of Kanal's very first students. He kind of modeled the boot camp after how he taught me. He taught me one-on-one. And so, yeah, feel free to email me if you have any questions on anything. I've been typing my email in the chat, but I'll type it again now. I boot camp or answer questions you have about anything.
Oh, there's a chat?
Yeah. That's what I've been typing on.
Ooh, Reginald's got a good question for you, Harsh. Harsh, how do you handle a big gain in the morning? Do you continue to trade the rest of the day or take the rest of the day off?
Yeah, this is a good question. Like, good thing you brought it up. So, as I still consider myself as a rookie because I still have a kind of almost a year. So only a year trading experience. So I'm not by no means I'm not nowhere near close either Kanal or Maribel. So if I have a good gain in the morning, like the gain that I haven't had in a while, I'm just gonna I'm not saying I'm gonna take off, but I have a system that I only let $100 let go. Like I'm gonna give $100 to myself, and I'm gonna tell, okay, you have this $100 now. You can play with whatever you wanna do. Just lose 100. Do not lose more than 100. And once you lose that 100, I'm out. I'm done trading for the day. Because I don't want to give back my profit. I'm a rookie. I need to save my money. I need to save my profit. You need to learn that.
So I have the same type of thing. I do anything once I'm over $2,000. I have a 25% give back rule. So I give myself a little bit of leeway because ideally it's nice to just take off, and I do that. I take off. Well, I'll tell you what, going to the beach, when I work with Dr. Miniker and stuff, he always tells me to take off. I'll tell you what, man, going to the beach so much this summer, it's probably cost me like 50 G's in profits. But, I mean, in hypothetical profits, I'm sure I would have probably taken all sorts of losses if I had stayed to trade. But that's how my mind works. But I give myself a stop loss. So, like, say you're up $2,000 and you give yourself a 20% stop loss, meaning if you lose more than $400 of that $2,000, then you just stop trading. Or you can do a 10% stop loss or whatever you want. But the key is to have a stop loss. Because I'm a momentum type of person, typically if I get hot, I want to push in my chips a little bit and get more hot. But what I do notice is that it's not really linear like that. Usually if you make 5 or 6 good trades in the morning, the odds of you getting to like 9 or 10 good trades in a row is like so small. The human brain can only make so many good decisions in a row before you start losing its impact. Every decision you make is not as sharp as the one that's previous because you've made some money. You're going to get inherently complacent, but it's just a numbers thing too. If you won 5 or 6 times in a row, which often happens to me in the morning, the odds of you getting number 7, 8, 9, 10, you get smaller and smaller every time. Hey, Tony wants to know, do you hide all of your P&L so that you're not sitting there watching it?
No, I don't. I don't care. I mean, I look at it. I get happy when I'm off.
Yeah, it's nice.
Yeah. So.
You don't want to make trading decisions on it, but I stare at mine all the time. I don't turn that shit off because I'm looking at it. That's my validation.
Yeah, I like it. I like to see that number go up.
Yeah, you want it to go up. And you just can't let it. You can't let it impact your trading decisions.
Yeah, there you go. Yep.
Like here, like what I used to do is if I was up like $1,800 or something, I'd be like, oh, if the stock goes up 10 cents, I'll get to 2,000. It'll be the greatest day. And so I want it to go up 10 more cents so I can get to 2,000. And I get to like 1970, and then it just drops like a rock, and I never sell it because I have these mental numbers, mental numbers in my mind, and that doesn't work because now you're trading your P&L. What you want to be doing is trading your stock, and looking at your P&L is okay. Now, if you are totally impacted by your P&L, that you just cannot control yourself, which is going to happen if you're new, block it out. Yeah. No big deal. Dun 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 dun. Dun 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 dun. How can you tell if a stock is high or low float? Easy enough.
Yeah. You can go on Yahoo Finance and put any ticker and go to the key statistics. You'll find the float there. Any kind of information. I even go through their balance sheet. Like whatever knowledge I have of accounting, I apply them and I find them. I analyze the companies on fundamental basis too sometimes, or if it's a good company or a bad company. But yeah, you'll find everything there.
And for me, Orlando, at this point, I don't need to look at the key statistics and know if something's low float.
Yeah, you can just tell.
You can tell. Look at the volume. Look at the type of stock. Look at the spread on it. Look at the candles of the daily chart. Does it have big range? Mm-hmm. And from there, you'll be able to tell. You'll be able to narrow down the float. At least, is it under 100 million? Is it between 100 to 1 billion, or is it a billion or more share float? Which is really all you need to know. You just looking at those things, you'll be able to tell. Hemal Shah, man, it's India, it's Gujarati city over here, buddy. Hemal wants to know: is there a straightforward tool method indicator to identify a thin stock? Yeah, Hemal. Usually, a thin stock is something that I would say that it's got a spread on it. And it can just
YY or Q. I mean, if you guys know, if you haven't traded.
And also something with a spread on it, something that moves really wild at times. They can just drop out of thin air. Those are kind of the thin stocks. Dun, 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 dun. Tom Brothers, describe your style, day trade, swing trades, chart reading. Missed most of the webinar. Tom, the webinar is recorded on YouTube, but we're mostly, at least me and Harsh both, and Mary Beth are primarily day traders. Maybe 10 to 20% of my stuff that I do is swings. I mostly just do it in IRAs now, because in my main trading accounts, you can make so much more money day trading. It's just harder.
Yeah.
You know, swing trading is really easy because, you know, but the thing is, if you have to have, I think that you need a lot of capital to be able to swing trade and make profits, because if you're a good swing trader, you might have like 40, 50% returns, or even if you have 100% returns, and that's really good as a swing trader, but then you would need at least $100,000, $200,000 account to make a full-time income out of it. You know what I mean?
Mm-hmm.
Where, you know, if you're a day trader and you're good, you can have, you know, a $10,000 account or $20,000 account or $30,000 account. You can. It's easy to make $1,000 once you get the gist of how to do it all, and then, you know, do $2,000. Wahid wants to know, do you ever use the VWAP?
Yeah, VWAP is the that's the only thing that I use like very much, because VWAP is used by like the big fish, like the big institutional trader. Like what happens with them, like I read there somewhere, when they have a job like the institutional trader, like when they're about to take a big position in any company, what they do is like, if they're trying to buy something, if they're trying to long, they'll buy anything around the VWAP. So if the trader is buying around the VWAP, anything around the VWAP, he's getting his commission like bumped up. So let's say if he's buying right underneath the VWAP, you know how Kunal says when he sees stock like goes below the VWAP, and as soon as the stock busts through the VWAP, that's his telltale sign. Okay, I'm going in. So that's what they do. Like they like to let the stock drop underneath the VWAP, but they won't let it drop they won't let it go too further down from VWAP. So what they do, as soon as the stock comes to the VWAP, they buy. They buy because they get commission. That's where they get their commissions. So I do use VWAP, yeah, and VWAP is very important.
Boom, 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 boom. Let's see. Dun, 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 dun. Hey, Marie, everybody starts off at 300 shares in the fund, unless they have a particular type of style that they like to trade. Like some of the guys, they practice on the simulator. Marie's asking, how do you determine who trades how many shares in the fund? So we start off with everybody at a 300 share max, Marie, and because I see the simulator trades, so somebody's trading smaller stuff like $10 stocks, $20 stocks, $5 stocks, and that's kind of where they found their groove on the simulator. Then, you know, we let them trade 500 shares or 1,000 shares because that's the style of stock that they're trading. You know, so it's not always static. You know, because we can see everybody's simulator results, we do have an idea. When they say, hey, I need more shares to trade due to my style, I can just look at the simulator and be like, yeah, you're right. Dun, 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 dun. Let's see here. Hey, Sagil, how you doing? Leopoldo wants to know, do you ever hold stocks overnight?
Nah, I haven't traded like swing. I haven't done swing trading like that. I haven't kept anything overnight. Because I don't have the capital like that.
Yeah, I do in my IRAs and stuff. It's fun, but it takes a lot of your focus away. If you day trade and swing trade in your same account, it's like it's hard to track your results. Corey wants to know any advice on how to avoid chasing.
Chasing? Yeah, just keep a simple thing in your mind. There are like 8,000 different stocks out there. So if you miss the one, like the one you're watching, don't worry, move on. There is like 2 more waiting for you.
True. Lori says, on the business of trading, how do you deal with wash sales and how do you use mark-to-market accounting? Oh, shit. That's some heavy stuff. Lori, I'm a firm believer in a few things, and I live my whole life like this. One, I never care about taxes. We live in America. We pay our taxes. Best country in the world. Whether my taxes are 50%, 40%, 70%, doesn't matter. I want to make more money. I make more trades. I run a better business. Hire better employees. Work harder, you know. And the details of accounting, I leave to the accountants. Spend my time thinking of big picture things and things like that. I know in the fund, everybody's listed as like, is it a 1099 or they're listed as employees? And so it's all within the fund, the accounting, and then everybody takes out like distributions and withdrawals essentially. How it goes in retail brokers would be essentially, you go on Ameritrade, you have a year-end kind of tax report, print it out, give it to your accountant, they'll do it for $100. In terms of sales and stuff like that, we don't trade around it because we trade setups, and when we see a certain setup, we got to go and take it. The tax consequences of it are a drop in the bucket because, you know, I'm trying to make $1,000 or $500 on a trade, whether it's got a particular accounting rule on it is a drop in the bucket compared to the profits. So, you know, for the most part, I just send it to the accountant. Karen, if you scale into a stock, buying some shares and then buying more shares as the stock price rises, then if you want to scale out and you're only selling some shares but not all, will the system automatically sell the first shares that you bought? It depends on the broker or the software. I mean, it's all the same, Karen, because it's all about aggregate totals. You know, you have an average price because you bought twice, and then you have an average price of sell. Now, whether you're selling your first year or last year's, it doesn't really matter, but different brokers will account for it in different ways. Dun, 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 dun. Karen says, is there a place where you guys discuss stocks or the trades of the day, like Google Plus or Twitter? Karen, we have, for our boot camp students, we have our own personal Bulls on Wall Street community where all the students go and post their trades and their blogs and all that. Otherwise, you know, we don't have an apparatus in general besides our own website. And then our Google community, which has, man, I don't know, 500, 600 traders in there. And we just go and we share everything. Trading results for every student is required to share their trading results, post their watch list. And that's where they go and ask for help. And we pair up the students with each other. We call them boot buddies. And, you know, that's kind of where we work out of. Jerry says, hey, Mr. Cox, says, how do you keep from getting cocky after a series of successes? Sometimes he gets overconfident.
What happens is, like, you always got to remember where you came from. Like, I came from a busting of, like, a 10,000 account last year. So I never forget those moments. Even if I'm, like, in a winning streak, I always have the picture how I felt when I lost that 10 grand within a month. So always remember where you came from. Never forget.
Boom, 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 boom. Sawan says, one of my main problems is overtrading. How many would you recommend for someone having an issue with overtrading in terms of trades of the day? He's saying he's giving myself a max of 5 with a goal of 2 to 3.
I mean, I wouldn't, like, the thing is, like, I wouldn't keep any kind of number that this is the number I'm gonna keep. Like, I'm only gonna take max 5 trades a day. No, it doesn't work like that for me. That's my opinion, but it doesn't work for me. I mean, if I like something, I'm gonna get in.
Me too.
Yeah.
Yeah. So Juan, what you have to ask yourself, it's not over trading if they're good trades.
Yeah.
Then you're just doing your job. It's over trading when you're a trading jumping bean, jumping from trade to trade, setup to setup, stock to stock because you want to make some money. That's over trading. But if you are taking stocks that are within the realm of what you do, and they are good setups, and your risk is managed, it's a wrap. You know, then it's not over trading. You could take 20 trades in a day. I used to have this thing in the chat room when Maribeth would say, "You're over trading," because she actually helps me manage my risk when I get a little bit wild. And I always, when I'm hot and I don't want to listen to her, I always say, "It's not over trading if you're winning." And that's not necessarily true, But as long as you're trading really good setups and sticking to your plan, then it's not over trading. Boom, 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 boom. Nicholas wants to know a little bit more about what you use VWAP for. So, Nicholas, VWAP is used in, I mean, it's a kind of a multi-hour class in itself on how VWAP is used. But I personally use it almost like an intraday moving average. You know, it's a line in the sand for me on whether stock is bullish or bearish, but I use it as also a potential bounce and resistance levels.
Yep. Right.
Dun, 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 dun. Anybody else got anything, guys? If I missed anything, there's sometimes so many questions come in that we miss a few. You feel free to email me kunal@bullson.ws. We will get a hold of you, and anybody that needs anything will be good. Himal has a question. I hear short selling. I've been told that short selling is un-American. What are your thoughts on this? Himal, let me tell you something about this. There are so many stocks in this world that at times are just big, big pieces of crap, and they deserve to be taken down. They do. But on the other side of things, stocks go up and down. They do. There's no difference between shorting a stock, like on a technical level, in terms of the mechanics of trading. To answer your question on the ethical side, there is no difference between shorting a stock and selling a stock. So if you own 10,000 shares of Ford in your IRA and you sell it, is that considered unethical, that you're taking profit in it? Because it puts the same amount of pressure as you short selling it. Because a short sell is a sell. And so in the mechanics of trading, it's the same thing. It's sell pressure. And so it's part of the balance of a market. There's buyers and sellers. And short selling is a part of selling. But you short sell 500 shares, it's no different than selling 500 shares of something. It's just part of the mechanics of the process. You know what's un-American is this is what happened to my dad, Himal, in 2008. He worked at a company for the last 30 years, Unisys. This stock went from, his whole retirement was in this thing. This stock went from God knows when, it was 30, 35 bucks in 2008. That thing went to 50 cents. And this is his life savings, his whole savings. I was telling him to short it. I said, just however many shares you own in your retirement, if you're not going to sell it, I was telling him to sell it. If you're not going to sell it, short that many shares so that you're just hedged. And then that way it evens it out. No. So what took 30 years to build up was gone in 3 months. Gone in 3 months. Down to 50 cents. And he's selling it all on the bottom because now he's panicked. It's like it's going to go to zero. It's like, well, it basically did. It's already all gone. At this point, your best hope in life is that your son becomes a badass trader. There's just no getting around it. But that's what happens. You hold, you pull and pray, and for the stock to hang out. That now is un-American. We've got to be taking charge of our financial lives. We've got to take charge of our destinies. And part of trading and how a retail trader can stay in the market and consistently make money is that you have to learn how to short sell. Dun, 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 dun. How do you trade in the first 10 minutes of the market opening? By Joseph. Joseph, the market opening requires market opening tactics and setups. So you have to develop a list of strategies and very specific setups that are open, that work just in the first 30 minutes of trading, and they will be completely different than the rest of the day. We call them in boot camp opening range trades. So we have ORB, opening range breakout, quick pullback buy to 9 EMA. We have a handful of 3 or 4 VWAP trades that we do at the open. And the key is to get good at those type of setups if you're going to trade the open. Mr. Gwynn wants to know, when exiting trades, do you use market orders or limits? And do you also hide or use iceberg orders? For me, at times I might use an iceberg order just to mess with the level 2. But typically I won't iceberg my orders. It just takes, it's annoying, pain. You got to make a whole nother click on it. I usually use limit orders, unless the stock is really liquid. Depends how thin it is. Harsh?
Yeah. I mean, I use limit order too if the stock is like a thin stock. If it's a thick stock, if there are orders every pennies, doesn't matter if you sell at market or limit. So if it's very like liquid stock, then yeah, at market. If not, then limit.
Cool. What else we got? I think that's about it. So it looks like that's just about it. So guys, like I said, you know, the first people that registered get a call from Mary Beth about boot camp. We'll get some free one-on-one trading. We have a 4-day class that starts July 14th. You can email me for the details. We'll give it to you for free so you have something to watch before boot camp starts, which is July 27th. We do take payment plans and all that stuff for boot camp. Just get a hold of Mary Beth. She will walk you through anything you need and give you a question. And that is the beginning. The boot camp is the beginning of everything. You know, you want to be a trader. You're going to need capital. Pass the boot camp. Trade inside ClickFund. And start to grow. It's all a process. You know, this thing is going to take months, but you got the right team to teach you there. So Juan, send me an email in terms of you know, investors lives chat room. Nate's a good friend of mine. He's actually probably the baddest ass trader in the game. He's a couple years younger than me. I've known him for nearly 10 years. We trade fairly similar. You know, he's got different setups that he uses, but we're often in the same stocks. You know, just the mechanics of how we enter them and exit them are different. But he's a badass. You know, that's all I really can say about him is that he is a bad mofo and a sharp young man. So guys, email me, Canal at bullson.ws if you need anything. This video will be uploaded right to YouTube so you can rewatch it and all that fun stuff. I love you guys. Harsh, my man, thank you.
No problem, anytime.
You come a long way from being a big pain in the butt. I must say, I'm very proud of you. And I do have some questions how you get your beard lined up so well, but we can wait for that later. Tell your girlfriend I said hello. Hey, you want to have her peek her head here? Do some advertising for yourself here.
Sure, hold on. Yeah, come here. Zara, come here. Real quick.
Maybe you guys will be a husband and wife.
Check out the poll results.
Hi.
This poll was fabricated. I mean, either I don't even know who put this poll up, but I don't even believe it for a second. All right, guys. We will see you all tomorrow in the chat room. Harsh, my man, good job. Good info. All right, peace.